Hello students, today I am gonna tell you the pillars of accounting. There are 5 pillars of accounting: the assets, liabilities, capital, expense and the revenue. First of all, we are going to discuss the assets. Asset is a resource with economic value. It means assets are those things which are used by the organization and it carries some economic value. You are going to purchase that asset that a business owns or controls with the expectation that it will provide future benefit. The asset is owned by and controlled by the business. That is important. And the expectation of the business is that the asset will going to provide you some future benefit, just like cash, bank account, office, shop, furniture, machine, etc. The liability. Liability is always an obligation. And why it is arising? It is arise during the course of its business operation. You are going to purchase something on credit, then the liability will arise. If you are going to take some loan from the bank, the liability will arise, which are settled over time through the transfer of economic benefits including money, goods or services. How you are going to pay your liability? You are going to pay your liability through money, goods or services. The examples are accounts pay, notes payable, bank loan, etc. Capital. Cash or goods used to generate income either by investing in a business, that the capital is actually the investment in the business, or you can say the residual interest in the business is called capital. The residual interest, if you are going to deduct assets from the liability, then you will get the capital amount. So the example is capital in business or investment in business, etc. Expenses. In expenses consist of economic cost a business incurs through its operation to earn revenue. You have seen so many of the examples of expenses, just like you are paying salary uh, to your workforce, you are paying rent for your factory or for your shop, you are paying utilities just like for electricity, for gas and your for telephone facility. The next thing is revenues. Revenue is the income that a business has from its normal business activity. Revenue is the main theme of the business because our business is totally dependent on such revenue. If you are going to revenue something, then you will get some profit. Otherwise, you will lose the business. The example is sales, commission, or interest. It depends on the feature of the business. If you are going to sell something, then it must be sale. If your business is the commission based, then you will get commission. And if you are disbursing loan to some other person, then you will get some interest. So the revenue streams are different according to the business. I hope that you understand all the pillars of accounting. Thank you very much.